Module 3 of Power of 2, and this is called How Warren Buffett Grew from $100 to $100 billion. Well, it's not something that's hidden. My admiration for Warren Buffett dates back from the 90s, I think, when I first heard about him, and this is just one of those many times I would mention his name. So this is a true story how Warren Buffett, one time richest man in the world, and I dare say this is 2020 March, and I dare say that after all this COVID scare and COVID virus is over and Warren Buffett lives to uh, and survives the ordeal, he will again be the richest man in the world. So how did he manage to do it? How did he grow from $100 to $100 billion? So all the ideas of Warren Buffett are contained here. Okay, sorry. Okay, so let me just present this now. For example, at age 25, here you are, or anybody that you know, at the beginning, you have no investment, and of course, no earnings from that investment, and you just decided to put up 1,000 per month. So at the end of the year, you have 12,000, right? So let's say that wala pa, it's just put in the investment, nothing gained. You don't earn anything. And this 2,400 is the income from the 20%. At least our goal is to earn 20%. So 20% earnings from the ones placed last year. So 20% per year. So what happens is that you'll add that from the old balance, and you will have 13,200. You have 12 plus 2 4, right? So about 40,400, and you will have an additional again 1,000 again per month. But then ang trick dito, my trick here is that it's just not 1,000, it's not just 1,000 per month. I added about 10% every year. So if it is 1,000 per month in age 25, by 26 you will put 1,100, then 1,100. So just what, 10% and 10%. I think it will be easier knowing that 1,000 times 1.1 is about, well, 10% lang naman yan. So when you add all this, then your investment at the end of the year is 600 after 1 year. And then the same process, no? This earns 20%, ito yun, and then you added another 1,000. So this is it. And if you proceed with that kind of an idea, by the time you reach 44, you will have 3,793,212 in your account. Now, let's say, sabihin natin, some people will say, well, that's by the time I'm 44. What is its value today? Its value today at age 25 will be around 1.8 at 4% average, 4%. Sometimes we said the inflation is 2%, sometimes it's 6%. So an average of 4% inflation is safe. So that's about 1.8 million in today's money. Ngayon, siguro sabihin 25, 44, that's about 19 years of saving, and I only have 1.8 million in the bank. If that's your kind of thinking, then I'll tell you, go around, meet people, ask them, 44, are you 44 years old? You have 1.8 million in the bank. You'll surely have few people answering yes to those questions. Now, it's not the end yet, right? So you're just 44. You keep on placing money, the equivalent of 1,000 pesos at age 25. So syempre it keeps on growing and growing, and plus your balance in the stock market is also growing. By the time you reach 60 years old, you would have earned your investment will end up at 81 million at age 60, and that's about 20 million a day. So again, if you are the kind of person na that's just 20 million. Imagine I saved that for the my whole life. But the question is, at today's money, if you are able only to save 1,000 per payday, then you deserve this 20 million. My God, I mean, if that's the only thing that you can save, And that means that you can really survive with that kind of money, right? Kasi if you want this to grow, then you have to save more. Ano lang naman yun, eh. That's how easy it is. If you want this to grow, then you have to save more. At 1,000 per payday or per month, and you just added 10% every year, and you earn 20% for your investment, then it will amount to 81 million at the age of 60. Of course, if you notice, you did not add anything. You did not put anything large here. It's just 1,000 per month. Okay, how will it happen? Of course, the first thing is you have to start early in life. If you start at 20 years old, then that would be larger, and then save regularly. Pansinin nyo, we didn't skip investment. Kasi if you skip investment and say, okay, I will double it next time, that seldom happens. And if you are used to doing that, then it will not happen. You will not reach your goal. Save regularly. Dapat regular returns, about the goal is about 15 to 20% a year. It's very doable. Although there will be times when it will go down, it will crash. But then as it comes back again, then you will reach the goal again. Ano pa, no withdrawals. This is the hardest part. If you notice, there was never a point in time that I withdrew money from that investment. And finally, you have to stay healthy and live long. Of course, it will not happen if you will die at age 55 or 56 years old. You have to live long. In fact, Warren Buffett is 80 something. I don't know, 90 years old, almost 90 years old, I think. So the secret is really staying healthy and living long. Sabi nga dun sa one article that I read, about 95%, 90-95% of Warren Buffett's wealth came when he was past 60 or 65 years old. Good news, patience correlates to long life. If you are the type of person who is patient, then usually you live longer. Okay. Okay, so power of 2, it is a reprisal. If you start year 1 at 10,000, okay, you'll double it becomes 20,000, double it again, power of 2, right? 40,000, it's like a virus. You keep on doubling it. 80,000 becomes 160, becomes 320, becomes 640, it becomes 1.28 million, it becomes 2.56 million, it becomes 5.12 million, it becomes 10 million, it becomes 20 million on the 12th, on the 12th doubling. Okay, so if you are somewhere in 40,000 or 80,000 right now, so and how many doubles are you away from 20 million? So that's about 1, 2, so that's about 8 doubles. If you're already here, then you're only 3 doubles away from 20 million, right? So, or maybe you can raise your stakes now to 40 million or even 60 million. So the idea is that if you have 10,000 right now, don't worry, you're just 12 doubles away from being rich, right? So the most important thing is your compound interest. So happy birthday, Warren Buffett, August 31, I think, when I wrote this PowerPoint presentation. He was the third wealthiest in the world during this time, $85 billion. I think we should redo this PowerPoint and then update this value. But during this time, he was the third wealthiest in the world. It was one time the wealthiest. He became a billionaire at age 60. Ayan, so there's still hope. But this is American billionaire, not Filipino billionaire. He built his empire entirely from Wall Street, and his average return is 25% per year since the 1950s. Average returns. So sometimes it will go down, sometimes it will go extremely high, but the average return is about 25%, 26 something percent per year since the 1950s. No wonder he turned his $100 investment to what it is today. Okay, so he bought his first stock at age 11 and filed for income taxes at age 13. So the principles of Warren Buffett are quite simple, really. Invest only in companies within your circle of competence. Don't think of enlarging the circle. Just stay within the circles. If you know bank, for example, I am a banker. I was a banker for a long time. I know financial markets and all that. So usually my portfolio would contain, syempre, banks. Now since I know about the portfolio of holdings and of uh, property, I also buy some properties and all that. So don't buy stock number two, buy the business. A lot of people are mistaken in this idea that you are buying stock, you're buying, for example, Jollibee at 100 pesos, and then you sell it at 200 pesos. Don't buy the stock. It's like you're buying the business. The principle of Warren Buffett is when you buy at that price, think of it as you are buying a stake in the business. You have to act and think as the owner. So when you buy 100 shares of Jollibee, you are the owner of Jollibee at 100 shares. So if you bought it at a higher price, then the chances will be that it will go down, right? So you have to buy within the intrinsic value of that stock. Of course, the way to compute that, there are a lot of debates, and I have also my own way of computing that based on the value investors of old, especially Warren Buffett and his teacher Benjamin Graham. So in the business world, number three, the rear view is always clearer than the windshield. Always when you look at the business, you will look at the past. You will say, I should have bought this. I should have sold this. It's always clear when you look back. Uh, so there's always you cannot see what will happen in the future. So you have to be prepared. Number four, it takes 20 years to build a reputation and only 5 minutes to ruin it. Think about that and you will do things differently. So the message here is integrity. Don't destroy your reputation. You have built it for many years, so don't destroy it for just a few minutes of pleasure. Number five on investing, rule number one, never lose money. Rule number two, never forget rule number one. Never lose money doesn't mean that, for example, your stock would go down 2% today or 10% today because of the crash. It's not losing money because you lose money when you sell the stock that has lost money. I'm not saying that you stay with the stock that has lost a value, right? I'm not saying that. I'm just saying that if you are really conscious about investing, then you will only buy companies. I'm not saying stocks. You are buying companies that are worth the value of the price that you paid it for. So if you buy, for example, Mega World at 6 pesos, you are saying that Mega World, the whole business of Mega World, is worth 6 pesos times the total number of shares. So that's how it is. You have to look at that and think about the future of the company. uh, don't just buy and sell because of the fluctuation of the market. Okay, six, risk comes from not knowing what you're doing. A lot of people are talking about risk in the stock market, risk there, risk here. Actually, you have risk if you don't know what you're doing. Okay, number seven, successful investing takes time, discipline, and patience. So, Warren Buffett said, no matter how great the talent or effort, some things just take time. You can't produce a baby in 1 month by getting 9 people or 9 women pregnant. Okay, so ang idea niya is that investing takes time. Our favorite holding period is forever. This is somewhat very close to my heart. Really, Warren Buffett influenced me here. There used to be a time before the beginning when I would ask myself, bakit holding period is forever? That means even if I already earned a lot of money, I'm not selling it. He proved this. He has proven himself time and again with this kind of attitude. When Coca-Cola was trading below intrinsic value in the 1987 crash during the time of the, I think, Black Monday or something, he bought a lot of Coca-Cola October 1987, and then when it went to the highest value price wise versus the real value in the 1990s during the time of the internet bubble, he didn't sell it. So what he did was to technically sell it only to be bought by a company that he owns, so it's like they're redistributing Coca-Cola below, but he never sold Coca-Cola. It still belongs to Berkshire Hathaway. Be fearful when others are greedy. This is very important. Be greedy when others are fearful. When the market is down, what the market is undergoing right now. If you look at the market, it's always Valentine's Day, always red. Today is March 2020, so the COVID scare is here. A lot of people are staying at home, no work, no income. So a lot of people are fearful. So when people are fearful, they sell stocks. So when they sell stocks, they usually sell stocks very low. So you have to be greedy and buy a lot of stocks when others are fearful. And when people are greedy, they are still buying and buying stocks kasi the media says, okay, the stock market is earning a lot of money today, so a lot of people will flock in the market. They don't know that that by the time the news reach the everybody, the prices have gone so high. So when they are already greedy and they want to invest in the market, that's the time you exit. You have to be fearful because you come to think of it, you look at the value of the stocks and say, is this worth this value? Okay, so you can sell some of the holdings that you have and then buy some stocks that are under, or some companies that are underpriced or undervalued. So number 10, the rich invest in time, the poor invest in money. So really, when you look at the principles of Warren Buffett, it all revolves around the concept of time. He is so patient. He invests in time. Sometimes he would buy companies that others are so others doubt. For example, during the time when the American Express was being dumped by everybody, it was selling only. In the book, I read that it was only selling at price earnings of 2 times price earnings. So it really went down. So what Warren Buffett did is to go around and ask hotels, ask restaurants, are you still accepting American Express? And they're saying, yes, we still accept it. So he said, there's nothing wrong with Amex. And sooner or later, this will come around, it will go around, and it will go up in price. So what he did is accumulate a lot of shares of American Express, and until now, I think he's still holding it. So really, an investment in time. You're not being fearful. You're talking sense. You're looking at the sensibility of your investment. The difference between a successful person and a really successful person is that the really successful person say no to almost everything. Ang idea dito ni Warren Buffett, the idea of Warren Buffett here is you have to be able to say no to everything. The concept of the Mr. Market, ito yung you're playing at the you're the batter, you're at the mound and you are batting. And Mr. Market is sometimes fearful. He would give you a low price, so you think about that, and maybe you could buy it at that point in time. Or sobrang taas naman, meral ko at 400 pesos, so masyado mataas. So the really successful person say no to a lot of trade calls, trade opportunities. Kasi these are just trading, so you have to say no to a lot of investment opportunities. Ang titingnan mo is that which one is really worth buying and really investing your time in. So Warren Buffett is called the Oracle of Omaha. He was the richest man in the world in 2008. This was the time of the crash, remember. He was a fundamental analyst. He was a value investor. So Buffettology 101, business is not equal to stock price. What you see in the papers are the stock price. That is not the business price. If you are the owner of, for example, of Jollibee, and people will start buying Jollibee at the price that it is now, multiplied by all the number of shares, then probably if you're Tony Tan Kakchong, you'll say no, I'm not gonna sell Jollibee at that price. So you have to have the owner's mentality. Look for companies that do well even in a recession. So today we are at a recession. I think we are having a slowdown in our economy. Which companies are still doing well even in a recession? Maybe banks are still doing well. Maybe certainly not, maybe not construction, maybe the food companies, the financial institutions are still doing well. Find the real value of a company in its management. Yeah, importantly, Warren Buffett is you look at the management of the company. If the managers are good people, they are people who are trustworthy, then their company will always rise in price. If the stock price of a company is considerably below its real value, so ito yung intrinsic value, buy when the real value, according to your computation, is below if the stock price is below the real value. Don't be too concerned about the day-to-day fluctuation of the market. I don't really look at the price anymore. There used to be a time when in the 90s when I was just starting, I would really participate in the fluctuation of the market. What I realized after many mistakes is that you cannot really time the market. You cannot buy at the absolute low nor sell at the absolute high. That's just something that you cannot do. Maybe you can do it in like 1% of the time or 10% of the time, but not always. And usually when you are wrong, you will be so wrong that you will erase all your gains when you were right. So ang pinamuna talaga is don't be wrong. Okay, so buy long term, not short term. Don't look at the fluctuation. Don't worry about the up down cycles of the economy. This is true. I mean, even if you are, for example, you are a follower of the property sector, of course there are up and down cycles of the property sector. But if you know the value of the company, you know their income, you know their income potential, you know how they're performing, you cannot say, for example, I'm not going to buy Mega World because property sector is down today. You don't know that. I mean, there was even a time when somebody asked for my opinion about which companies are good to buy at that point in time, and I said, at my in my books, I would say Mega World at 177 during those time, and I think Lopez Holdings also First Philippine Holdings. But he said, this I think this is long term, which is not short term. I'm looking at only a 3 month long term with short term. With after I buy, maybe after 3 months I will sell. So I said, I'm not like that. I always look long term. So after 3 months, he insisted in buying another company. I think it's food or something. So true enough, it went up, but only about 2-3%. But my Mega World from 177 it became 3 pesos and then 5 pesos in December of that year. So even if my view was deemed to be long term, even in the short term it's already performing. It's already outperforming the so-called short-term trade. So be prepared to hold on to your stocks for a long time. I've bought stocks in the 2008 crash, and some I have bought since 2000 pa, and I still am holding them. Hold on to that stock, to those stocks for those companies for a long time, because the only time that you will sell a stock is that if the stock is no longer meeting the expectation. Like for example, if you bought PLDT during that time in the 1990s, and then you say, oh, PLDT is not anymore earning. But if you bought PLDT at that time, that's about only 200 pesos. It's already gone up in value. So whatever the fluctuation today, you would say that why would I sell PLDT? I've been holding it for like 20 years already. So just look at that. You have to prepare to hold your stocks for a long time, because when you have held your stock for a long time, then the daily fluctuation of the market doesn't matter anymore. So fundamental analysis talks about mga financial statements, value investing. It is the strategy of selecting stocks that trade for less than their intrinsic value. So you have to compare current share price to intrinsic value, not to historic share price. Don't look at the historic share price yung tipong, okay, three months ago it is at this point, so maybe it will go back to that. No, don't look at that. Intrinsic value is what is important. Look at the income. Look at the historical PE multiple. Tingnan mo, what is the value of the stock right now? If the income of the company is at this level, diba? You would know. Buy a business, not the stock. We already talked about that. Example of a fair value: the amount for each an asset can be exchanged between knowledgeable, willing parties. Pag nagbenta ka na ba, if you sell a house, if the person on the other side bought it, then that's a fair value. Investment value is usually it comes from the mind of the investor. So, for example, I bought, let's say, for example, a piece of property at 3 million. And I know that the price in Santo Tomas, for example, is going up in prices, and then by the time maybe 5-6 years from now it would already triple in value. Then that's my investment value in my mind. Okay, the book value is just as it is. This is the net asset minus liabilities of the company. That's the book value. It is what the company's assets minus all the liabilities. When it is liquidated, this is what the shareholders would receive. The intrinsic value naman, the actual value of the company based on the underlying perception of its true value. So for example, Disney, if you look at Disney or Microsoft, if you look at all the assets of these companies, asset lang merely asset. You don't look at what the software would sell the next month, the next quarter. No, just the asset. You would be mistaken kasi these are tables, computers. The intrinsic value has an added value because there's a perception of value, for example, for Disney or Marvel or whatever it is. No? So this is an example of an intrinsic value versus price. So yung the blue one might be the price. So medyo mataas, no? Naging 7, naging 5, naging 4. But the intrinsic value seldom fluctuates. Usually it goes up in time based on the earnings per share. No? Pataas ng pataas yan. Maybe the earnings per share increases by about 10% a year. So you will see that the intrinsic value also increases maybe about 10, 15, 20% a year. So ang goal mo lang dito is every time the price would go below the intrinsic value, then you have to buy, and then when it goes above, maybe you can sell some of your holdings and then buy some stocks or some prices, some issues that are underpriced or undervalued. So how to turn a cell phone into a car? This is a true example. No, nung 2002, it was at 10 pesos, and I told my friends, from my former friends from the bank where I used to work, lika bili tayo. But then it became 6 in 2003, so we lost 40% of our money, and everybody was cursing me. And bayan, sana pala I didn't buy that stock anymore. And during that time, ang mga usong cellphone noon 3210. So you have 10,000 pesos, you would have bought a 3210 during this time. But then this became 25, this became 50, this became 80 in 2008, and then went down in 2008. Remember, from 6 it became 80, so like times 10 na yan. So if you bought here, it would have become 100,000 in 2007. But it went down kasi nga nagkaroon ng financial crisis. It went down to as low as 30. Still, kita ka pa rin, no? Because you bought at 6. Ako, I bought at 10. I didn't sell here, I didn't sell that here, I didn't sell here yet. So look, it became 100, it became 150. I think this is the time that I sold out, but it was a mistake. You know why? Because it went up as high as 300 plus. This company is Meralco. Maybe a lot of you are saying, why did you sell Meralco at 150? I'm also asking the same question to myself now. But imagine Meralco was trading only at 6 pesos in 2003. You yourself have been around in 2003. What have you been buying during that time? If you spared 10,000 pesos during that time, it would have been 500,000 pesos today. That's how simple it is. And you can still look for underpriced stocks in the stock market, especially now that we are experiencing this crisis. So don't participate in the fluctuation of the market. You don't have to dart in and out of the market. Find a great company that is selling at a cheaper price compared to its intrinsic value. Buy the company, hold the company for the long haul, replacing it only if you find a better deal. This is what I've been doing. And then you have to rinse, repeat. Kumbaga, if you are thinking that your company is already underperforming, so for example, there was a time when I sold RFM only to make a mistake kasi it became high again because of yung nakuha nila yung I think Magnum or something. I don't know kung ano yung sila nila, Selecta ba yan. But anyway, I think they sold some property or some asset that they have, and it went up in price, so I missed that. But anyway, I sold that and bought some other stocks. Parang ganun. So, or for example, when I bought Mariwasa at 60 centavos, nag 3 pesos yan, naging Davin. So I sold that during that time. It's already times 5, and bought some stocks that are trading naman below the intrinsic value. Yun, that's it. So, these are the reminders that we have for fundamental analysis. Thank you for listening.